sorry.
So not acceptable. Are you
I will
ready?
make it up with stellar market commentary, I promise.
Yeah.
What's going on in the world?
Well, you should tell me.
Good things, good things.
Ok, let's go. Ben ritrovati sul Fodder New York Stock Exchange alla fine di una settimana che potrebbe concludersi tutta al rialzo, una settimana densa di indicazioni economiche importanti. Ne parliamo con il mio ospite qui sul floor che è Joe Greco, Managing Director per Meridian Equity Partners. Joe, thank you so much for being with us.
Thank you for having me.
So, Joe, we had great news today from the economy. You know, the data beat expectation. I'm talking about the job market numbers, and also in good news from Europe, where finally, you know, we have all the details of the bond swap operation. So, why isn't the market rallying?
Well, I'll go in reverse order. First, the news about the Greece bond swap is good, yes, and the knee-jerk reaction should most surely be positive. But in the end, remember, what it essentially means is 95 or 97% of the bondholders have agreed to take a considerable write-down on what their investment was. So, not necessarily the greatest long-term. Plus, it doesn't necessarily guarantee the fact that Greece will still be able to make any payments. All it does is say we've now agreed that you owe us less than you used to. So Greece is still a little bit in the precarious position. So I think the market is understood. Plus the fact that we've been dealing and chewing on this for so long, perhaps a lot of it's already baked into the market at this point, especially on a Friday. That brings us to the jobs data and a little more domestic picture, which, yes, it is a little bit improved. Incremental improvement is what we're hoping for each week and each month and hopefully into the election of this year, where we think gradually we'll see the market and the economy improving. But just be cautious, because at the end of the day, the improvement wasn't gangbuster. The numbers weren't, blowout by any means. And there was a little bit of a revision that puts that question mark in the back of everyone's mind. Will this be sustainable? And what happens if we do get to that week where all of a sudden the numbers, fall back, and all of a sudden unemployment goes up?
The employment rate stayed the same. I mean, 8.3%. Maybe some people were hoping for, even a bigger number that will show that more Americans are actually, starting looking for a job again.
Well, expectations were, they had very few economists thought 8.1% was possible at this point, because we moved from a 9% handle well into the, right into 8.3 very quickly. So I think at this point the market kind of understood and anticipated what it was, which is indicative of the market only being up, 20, 30 bips.
And going back to Greece, as you were saying, of course, it doesn't guarantee anything. And I think it doesn't even help that Fitch now is following S&P Standard & Poor's. And, he's expecting this time is a restricted default compared to S&P that said selective default. Does it make any difference for you?
Slightly. The fixed income guys are all over this, of course, because it means a lot more to, that side of the world. In the equities market, what it basically says is it reaffirms what we already know, and that is, deleverage whatever exposure you have to Greece, because something is still brewing and it's not good, and in the most basic of terms. At the end of the day, the U.S. equity market, and I think most of the global market, is understanding that the Greek situation is far from being resolved. And it's probably on the first step in maybe a multi-step process, being that there are a few other European Union members who have similar issues, if not very, very close to the same issues as Greece does. So there's still a little bit of caution there. So I would just be safe in hedging yourself and keeping the optimism there, because of course everything is gradually improving and there is a lot of momentum in that direction. But at the end of the day, nothing has been finalized, so there's still a little bit of room for concern.
So now, anyway, we are up today, but we had a very bad day on Tuesday, the worst of 2012, and a lot of people were hoping that would have been the beginning of a big correction, but it did not happen.
No, not at all. Monday started a little bit of a tipping. You saw a lot of selling, people taking, a little profits off the table. Tuesday exacerbated, the effect. And then all of a sudden we were back and the market started to rally again, which we know there are really two conditions in the market. There are people who are very long. They've been long the market. They hit it right. They've been long since this year started, and they've seen a nice run up. And then there are people who are not long and who do not want to buy what they presume is the top. Anything above 1350 in the S&P is where people start to think the market is a little bit heady. Up near 1370 is where they think the market's very, very heavy and is starting to hit its head. So those people who are not in the market clearly got involved because they saw that as maybe the first of maybe 3, 4, or 5 steps on the way in for them to buy some equities. And I think that that's really all it was. There was some bid side support. Then you get a little bit of positive encouragement with data. You see consumer debt is increasing. Household debt is being, driven down. That shows an economy that's starting to, thrive and exist again. People are going out and spending a little bit of money, and they're okay with their debt level. They're paying down their mortgages. Those are all very positive indicators for the U.S. market. And of course, the administration is going to do everything they can to make the picture look as bright as it can, which we would expect in an important election year.
And now, finally, what do you expect for next week?
Well, always the future, and wondering what the crystal ball is going to tell us. At this.
What are you going to look at next?
From an economic data perspective, we got a lot to chew on this week. From a global macro perspective, we got over one major hurdle with the Greek situation. So really at this point, I'm looking for standouts. I'm going to revert back to trader mode instead of, economist and investor mode. And I'm going to look day to day, what are the best to breed stocks and industries that I can get into and make some moves. Because while financials have been strong and we've seen a little bit of a run up in energy on, the risk over with Iran and perhaps even Israel, I think there are a lot of areas, technology and whatnot, that have a little bit of upside coming to them. Perhaps in anticipation of what's going to come of Facebook. I think later next week we'll learn where Facebook is going to list their IPO. Perhaps that is an indicator of what type of market feel there is for it. So that there's now all of a sudden we look at the other variables. This game is a very fun game. There are a lot of moving pieces at all times. So.
Forget Greece. Facebook is coming.
Well, we forget, Greece really we just pushed to the side for a little bit, but it's still in the peripheral view,
Thank you very much, Greco, for being with us.
Always. Thank you for having me. All right.